The following is a presentation of TFNN.
Good afternoon, folks. Hopefully everyone can hear me just fine. We've got a small group this morning, mostly because I took a little time off, but we're going to go ahead and get our every other week webcast rolling along here. So with having a small group, if you do have questions as I'm going along, just feel free to type them in. And so let's go ahead and begin. Also, if you're listening to the archive, feel free to send me an email at steve@tfnn.com, and I'll be happy to follow up and answer any questions that you might have from today's session. So the next one will be 2 weeks from today, and again, we'll go ahead and keep these on Wednesdays at 3 p.m. The areas that I'd like to cover during this webcast today, I want to take a look at the lunar and astro cycles that we're currently in or are on our near-term horizon, the planetary aspects, and what I want to do is I want to share with you the type of impacts that they have on different markets out there. And this is coming from various studies that have been performed by others out there, as well as myself laying some of these aspects on charts. Specifically, we're going to be taking a look at Venus, Uranus, and the charts, the reason being that's referred to as the .618 planets, just simply because of the time period that it takes to travel, which is 225 days out of 365, which when you divide that, you would come up with .618. I will take a look at the August 2012 major aspects, and this is something that I'll also start including inside the normal daily newsletter on a monthly basis, just simply so that you have access to it for those of you that might follow these aspects and some of the charts or commodities that some of these aspects have an impact on, just so that you can be aware of them ahead of time, or certainly on the day that you're trading. We'll also take a look at the P-index dates that are coming up here. I believe on Sunday is the next P-index date for us. Just an overview of the general market, today's action as we speak today. Things are relatively flat out here, and we'll take a look at that. A quick overview of the current trades that we're in, any new trade setups that we're looking at, and questions and answers. So as I say, if you've got questions as we're going along here today, just simply go ahead, folks, and type them in. Now, the most recent aspect that we had out there that typically has an impact on the charts is the apogee lunar phase that occurred on last Friday at about 5:50 in the afternoon. 10:50 here is ephemeris time. Just to back it off to Eastern Standard Time, just simply back off 5 hours. And we'll take a look at what that looks like right now on the chart. And it's really important if you are an intraday trader or if you trade the futures, the S&P futures. I think it's very important to go ahead and identify that mark on your chart. And I can't answer the reason why this acts as a support and resistance line. I just know that when apogee and perigee show themselves, they act as a resistance and a support line. And the idea is, excuse me, is that, if you're from an intraday trader standpoint, you should be looking to be long the market when price is above it, and as well as you should be looking at short when price is below it. And I have to give it just a little bit of room. So what you can see here on this chart, I've got that apogee lunar phase that came in, at 5:52, and I've got that marked here on the chart. In this case here, I just simply chose the 5:50. This is I probably chose 6 o'clock here. It's a 30-minute chart out there. And you can see as the ES Mini here first started traveling down into that area on the 13th, this acted as a resistance area. Certainly was coming against this little swing point here, but it just simply acted as a resistance area. Even yesterday, this is, if you take a look at yesterday as the market was moving down into this time frame here, and I'll switch to the live charts in a little bit, you can see how although price didn't travel all the way down here, this is the new line. So you talk about two areas of support on the ES Mini. There are two very important support areas here that have been drawn in. The bottom of this hammer candle, which you can see was tested here and held, and hammer candles are very important areas of support. And the reason is if you just simply take a look at this hammer candle specifically on a 30-minute chart, and you just stop to take a look at the psychology behind what was going on in the traders' minds, you can see that in a red candle on my chart, the top of the body happens to be where it opens. Now, because it's the ES Mini, you're going to typically not see any gaps out here. So you had the close from the prior bar and obviously the open of this bar. But you can see intra 30 minutes. So during that time session, the ES Mini moved down quite a ways, and you can see the bulls stepping in and pushing it up. And so this shows you that this becomes a very strong area of support. And so it'll help you in your trading on certainly on an intraday basis, or just if you just simply want to understand what's going on in the marketplace. Now, these candles work on daily basis as well. They just simply show themselves more often when you take a look at them on an intraday basis. So you can see there's a strong area of support here in the 1396 area, and that's with regard to the apogee. So I do recommend that you go ahead and mark those on your chart so that you can take a look at how you might be able to benefit from trading that. Excuse me. As we take a look at this chart here, which I've been including in the daily newsletters, just really taking a look at the lunar phases, and the primary 4 lunar phases being the full moon, the new moons, apogee, and perigee. And we can certainly see that the new moon and full moon has been working just really, spot on. If you take a look at the last full moon as the market was moving down, the market stopped on that day. That was the June 4th. No, that was not June 4th. That was the I don't have the date off the top of my head. I have to switch over to the chart. But you can see how the market moved down into that full moon has stopped, and that has been an area where the market has bounced from there. We can take a look at the last new moon, this July 19th date here, and we can see how that acted as a market was moving up into it. Market moved down. Now it marks short-term highs or lows. So the way that you trade it once the high or the low is, and then you have to. That's just simply more of a timing tool. And then from there, you just simply have to pay attention as the market moves up into swing points or retracements or expansions or other patterns that might set up. But you can see here, full moon, a low, new moon, high. Full moon down here marked a low. Full moon up here as the market was moving in was a high. New moon here as the market was moving up was a high. So you can see new moon here as the market was moving down into a low. This one here was a failure. Certainly wasn't at the on May 16th. Wasn't a high or low. The market already moved down. But what we did have going on here is you had both perigee and the full moon at the same time. So if you come back and take a look at right here, you had the market moving down into this new moon. So what we can assume with the market hanging out at the highs here, the probability is that the next new moon cycle that we have, that is on Friday, is likely what we'll see as a high in the marketplace. So just as the market's been edging along here, it's possible that tomorrow or Friday ends up being the high, and it could most likely be Friday. But we'll take a look. And the reason why tomorrow, because we have also another major planetary cycle that takes place. So the next new moon is Friday, and that's 15:55 Ephemeris time. That means about 1 p.m. our time. 1:50, 5 hours, so 10:55. I apologize. So 5 minutes before 11 on Friday is when the lunar cycle comes in. Now, marking the just as I do with apogee and perigee, and marking those, I found that works, but not necessarily marking the exact time of the new moon and full moon, acting as a support or resistance area on an intraday time chart. So, and I can't tell you the reason why. I can just tell you that it works. This chart here I've been including in the newsletter. Now, the moon conjunct Pluto phase is basically over, but that and I didn't pick up on that until we were pretty far into it. But the moon conjunct Pluto won't be back until sometime late in 2013, when that 55-day cycle shows itself again, and it worked really well during this time period. I only wish that I had picked up on it a bit sooner. If we take a look at so we've got the new moon coming in on Friday, and then 2 weeks later on August 31st would be the next full moon cycle that we have. Don't know whether the market would be a high or a low, but based on the past here, the way that these lunar cycles have been working, it's likely to be a short-term change in trend in the marketplace. The next perigee lunar phase is going to take place on the 23rd, so that becomes a week from tomorrow. So you'll want to go ahead and mark that in your intraday charts and your ES Mini just to track how to trade that if you are trading intraday, intra-session. So what I'm going to begin including in the daily newsletter is going to be for each month, just as I identify for each month the lunar aspects that are occurring. I also do the number of planetary index dates that are occurring. I'll also include a chart here that just simply shows the major aspects, what we call major aspects, that are occurring during the month. And for the month of August, these are the major aspects. And what I mean by major aspects, and I'll go through that here in a moment, is really the major angles that we take a look at. But today is August 15th, and so today at August 15th, there's a couple of major aspects going on. Mars conjunct Saturn, also Ceres and Pluto in declination, and Venus opposite of Pluto. So today is so between today, tomorrow, and Friday, there's enough going on in the skies to suggest that what we are going to see is a change in market trend, and then that's followed up by the P-index date that occurs on Sunday. So it would seem that between today and Monday is where we will see a change in trend in the market, and it's one of the reasons why, it is the reason why, as well as the low volume, but is the primary reason why I've gone ahead and, since we're already in a couple of trades, mostly referring to the NDX trade, where I've gone ahead and expanded our stops, just simply because these are trades that we would have gone into, and I didn't want to necessarily get stopped out just simply to come back in. So this will be included in the newsletters. It may be in tomorrow's. If not tomorrow's, it'll certainly be in there beginning on Monday, so you can expect to see this page here. So the lunar astro cycles that are really on our horizon that we're referring to is the Venus square Uranus, Friday the new moon, and then Sunday the 3 and 4 P-index date. And I'll go through that in a little bit more detail in a moment. What I wanted to also share with you is I've summarized here all of the planetary aspects that seem to have an impact on a market. And this is done through, all of the resource materials that I've read and have gone back through. And what I've done here is just simply, so you can see on the S&P 500, when I'm referring to the S&P 500, really I'm referring to the stock market. So it could be the Dow Jones, it could be the New York Stock Exchange here, but just simply, so the stock market itself and those aspects, you can see where Jupiter has Jupiter aspects typically have a change in trend in the marketplace, with either Jupiter changing signs, with Jupiter and both Jupiter and Uranus going retrograde, or Jupiter or Uranus going retrograde. Jupiter/Saturn signs, Jupiter/Uranus signs, and when I say slash, I'm referring to major aspects. And I'll get to that just in a moment. So here is a table of planetary aspects and the markets that they typically impact. So I will also include this as a page in the newsletter, so that it'll be easier for you to go back and take a look at this chart, and then come forward here and see if you see a major aspect, come take a look at it to see if it typically has an impact on one of these markets. Even if it's not a market that you trade, you can come back and take a look and see that Mars is changing signs, as an example, and that it has a impact on the Treasury bond marketplace. And so you'll be able to take a look at that. And what you'd want to be doing is you'd want to be really, how you line these things up is you'd like to see some type of pattern completion, maybe an AB equals CD. Maybe it's a Gartley buy, a sell, retracement, a test of a swing point, but some type of pattern that is completing at the time, and utilizing these planetary cycles as kind of the fuse as a timing tool. So that's what this page is here for, and that's why I'll go ahead and start including that in the newsletter. So I've summarized everything that I could that typically has a impact on the markets. And where all that comes from, folks, is that it's coming from a series of areas. But number one, the data, either for the lunar or for the aspects the planetary aspects that we're looking at are coming from the ephemeris. And what I use is the New American Ephemeris. If you don't have one, I recommend you obtaining a copy of it. You would do that through Starcrafts Publishing, and that is their phone number there. At the bottom of the, this is really a one page that we're looking at. I've just simply, at the bottom of this page here, is this daily aspectarian. And this is what's referring to as the planets that are where on each day where there's certain alignments. And so there is this here obviously is the moon, and there's a code in the front of the ephemeris here so that you can understand what aspects are going on. Now, obviously, what I'm doing is what I'm doing is taking, a day of aspects and just simply gleaming them. That's what this page, in essence, here is. That just simply shows you what are the major aspects that occurred on that day, because there's major and there's minor aspects when you take a look at the bottom of the daily aspectarian. Now, the daily aspectarian is also where you're counting up the number of planets on a daily basis to identify whether or not you have a p-index date or not. And when I'm referring to major aspects, I'm really referring to these 5 major angles that are out there. The square at 90 degrees, opposite at 180, trine, which is at 120, sextile at 60 degrees, and conjunction at 0 degrees. So those are what we're referring to. That's what you're really looking for when you're taking a look at in the ephemeris, and that those are going to be the aspects that I have summarized that we've already just taken a look at. Now, there's going to be, what I want to do is when you have two planets that are in a major alignment with each other, there are, in going back and studying charts, what you will find is that, and here are the 5 different aspects we're talking about: sextile, square, trine, and opposition, and conjunction. So here are the 5, and here are the 5. When you take a look at two planets lining up with each other and being sextile or trine, they typically have a positive sentiment or a bullish sentiment. This table here and these aspects are really what were used by Donald Bradley when he created the Bradley model. So this is some of the detail behind that. And when you have two aspects where they're square or in opposition, they typically are a bearish type of outlook. So if we go back and we simply take a look at what's on our horizon out here, you've got Venus square Uranus, which has typically a bearish type outlook to it. We know the new moons and full moons as of late really couldn't care whether the market is moving up or down. If the market's moving up into either of them, it has marked a turn. And if the market's moving down into either of them, it has marked a turn. And the 3 and 4 planetary index dates really also don't care. They're non-denominational. Just simply as the market is either moving up or down into either of these, they have typically marked a short-term turn in the market, a short-term change in trend. So you'll also run into where you have aspects that are in conjunction. So conjunction here being when they're at 0 degrees, right, in alignment with each other. And what I've done here is I've created a table, a cross-reference table. And sometimes conjunctions are bullish or positive. And so when I'm using the word bullish, I'm saying it has a positive tendency. And bearish, just meaning that it has a negative tendency. So that way, when you see the information on the newsletter, when you see on a daily basis, if you see a major aspect that's in conjunction with each other, what you'll do, and so I'll also include this table in the newsletter, just simply for your reference so that you can go back and you can take a look at it, or if I make mention of something either in the newsletter, then you'll have a better idea of what it is that I'm referring to, and then you can go take a look at it. Doesn't mean that it always works, but these are the tables. This is the information, in essence, the math, some of the math, the majority of the math behind the Bradley model. And when you put all of this together, it's why in the Bradley model you're able to go back and forth as many years as you want, because it's really nothing more than providing a numeric value to each of these alignments to create whether the sum of that total is either moving up or down. It's nothing more than an average on a daily basis that indicates whether the markets, because of either a positive or negative sentiment, would be moving up or down. So hopefully I did a decent job there of explaining that to you. The minor aspects that are out there, the minor angles that you will see inside the ephemeris are these four here: semi-square. I won't even just and these are the degrees. So these are the ones that you'll see, and they typically don't have much of an impact on a change in market trend. So as we take a look at what's on our horizon here coming up tomorrow, you've got the Venus-Uranus planetary cycle. And for your information here, these are and I've got a few pages here, so that way if you wanted to go plot something on any of the charts that you have, you can see we've got August 16th, we've got tomorrow, so it really comes in this morning at 1:49. So at about 2 a.m. this morning is when Venus will square up with Uranus. The next time that you have a Venus Uranus aspect is September 13th, and then you've got one more November 1st and December 19th, or two more to round out 2012. And then you've got, obviously, going backward in time here. This also happens to be the 2008 through 2010 cycles that are out here. And again, these are all ephemeris time. But since we're not really marking those on a chart with regard to the specific time, it really is somewhat irrelevant. But here is just simply a list of those cycle dates for you, going back into the 2002 time frame. Now, here's a chart here. So here's a chart, and these boxes here, I've gone ahead and drawn some lines just simply so that you can see. And these are all of the major Venus, Uranus aspects. And so you can take a look to see, and again, this is nothing more than a probability game, if you will. And but you can see here, how often they have worked. And this one here, you can't really say that this one here, going back to when I say here, April 23rd, 2011, kind of, in my opinion, didn't necessarily really work. In this case here, coming back to March 1st, you had the market moving up, and certainly that marked a change in trend in the marketplace. Here, coming into July 7th, you had a change in trend in the marketplace. The market was moving down into this. This acted as a support area. Can't really say that this had an impact in February of 2011. Can't really, in my opinion, can't say that this had an impact on January 4th. If we come forward a little bit more, here's the blown up area. So I don't know why I did that, but July 7th. So this is what we just really took a look at here. Going back further into 2010, when you had Venus opposite Uranus. And remember, opposition typically has a tendency to be negative. Trine has a tendency to be positive. I don't know how. What I'm primarily looking for is do these aspects identify a change in trend here? But certainly, if you're going to take a look and say, okay, trine is positive, you had this aspect take place on June 14th, and the market moved up for a few more days. Venus square Uranus, didn't mark necessarily a high or a low, but certainly from a bearish or from a negative standpoint, that certainly seemed to work here. Now, in this case, Venus sextile Uranus just simply marked a high, even with sextile being typically having a more positive outlook. So, based on the work of taking a look at identifying these planets and whether or not they've marked either short-term highs or lows. Again, they don't work all of the time, and the times they don't work, I don't understand why. Just simply, it does show that it's much more than 50% of the time, as you can see here, where they really are identifying highs or lows or changes in trend in the marketplace, and is why we should be aware of this cycle. Now, the other reason that we should be aware of this cycle is this is referred to as the 0.618 planet, just simply because the time of travel between the two planets as they reach conjunction. So that any questions with regard to that? If you've got some, just go ahead and type it in, and I'll just continue on. On Sunday, what we have on Sunday, we've got the planetary cycle, the P index date. So the P index dates that are going to be on Sunday, we have what I've referred to as a 3 and a 4 P index date. The 3 P index date based on the original work that was done. If you do get a new American ephemeris that happens to identify some planets that were not in the original work when p-index dates were first identified. And what I've done, I have the New American Ephemeris in a digital format. And so I paid a decent amount of money to have transferred all that data into files, and that way that's how it allows me to be able to drop information on a chart. And I'll show you how I actually do that if we've got some time before we let off. But this column here, Ephemeris Time, new aspects, means it includes everything that's inside the New American Ephemeris Now. ET, Ephemeris Time, old aspects, just referring to the original work that was done. And since I had the data digitally, I just simply also went ahead and took a look at things based on Eastern Standard Time, new and old versus Ephemeris Time with the 5-hour time zone difference. And you can see when you take a look at different time zones, it sums up a different number of planets that are having major aspects on a daily basis. So again, these are the planets that were not counted in the original p-index dates. Were these four here: Ceres, Pallas, Juno, and the largest asteroid in the solar system, Vesta. And this is the work. And you folks see this. You see this chart that's contained inside the newsletter on a daily basis, and just simply so that you have a frame of reference. And what we're really looking for are the highlighted areas where there's anomaly, meaning where you just simply, from a percentage standpoint, don't see that few or that large number of aspects line up on a daily basis. So the remaining aspects, remaining p-index dates, I believe that we have for 2012, just three more. The one that is coming up on Sunday, then one in September, and then one in October. So we can see, based on, if I summarize what we've gone through, so far, give me a moment here. If I take a look at if I summarize what we've gone through here so far, these are the reasons why I believe that, that either today, tomorrow, Friday, or Monday. So between now and Monday are when I suspect what we will see is a market high. And that, again, let me just trying to get back to the chart here where I can summarize that. Because we've got the new moon that's on our horizon. We've got the give me a moment here. Where is it? Sorry here, folks. I thought I had it as a slide. Okay, because of Venus being square to Uranus, the new moon, and the 3 and 4 P index date out there. Now, one of the things that I'm going to go ahead and do for you is I identified this chart here that's going to start showing up in the newsletter on a daily basis, just simply so you know which different planetary alignments, major planetary alignments, are in existence during the month of August. So what I've done here is, if we just simply take a look at today's August 15th, so what I did was I went back through the digital data, just starting with 2001, and grabbed all of the aspects where you had Mars conjunct Saturn, Ceres and Pluto here, declination, Venus opposite Pluto, and I just simply took a look at those aspects, obviously, and I think I also took the Venus trine Chiron, Venus square Uranus. So I took a look at those 5 aspects, and what I did was I was able to put that into a database. Now, what I'm going to do here is I'm going to come over to the Dow Industrials. And so here's a Dow chart. You can see it's all clean and everything. This is just simply a daily chart. And what I'm going to do is I've got a database that has those tables. It has all of the aspects that occurred going back to 2001. And I'm just simply going to go ahead and utilize the tool that I've built for this to overlay those aspects on this chart here. And it should take just a moment to do that as I run the tool that will do that. We'll see just a pause in the action or something going on another one of my screens here. And in just a few moments, all of those aspects now are identified on this chart here of the Dow Industrial. So what we can see here right now, as I just simply pull this back, because there were 2 aspects here. Let me just try. So today occurring, you've got Mars is conjunct Saturn and Venus is opposite Pluto. Hopefully you're able to see that on your screen. Now those same aspects, as well as the other 5, because there were 5 total in there, are also identified on the chart. So if we take a look at the last time you had Venus square Uranus, which is the one that's going to occur tomorrow, that happens to be right down here. I'm just going to go ahead and draw it down here, forget about the arrow, but that happens to be when we saw a market turn November 27th. When you see near here, near just simply means that it occurred over a weekend. So November 25th was the Friday after Thanksgiving. So if you see a chart and you see the word near, just simply means that it occurred over a weekend. And so I don't know where to, whether you place it on a Friday or place it on a Sunday. And for me, it was just a way to have a frame of reference to know that. But you can see the last time you had Venus square Uranus, which typically, as we said, has a negative type of connotation to it, still just simply acted as a as a market turn. Now, I believe in November 25th there might have also been a couple of lunar phases going on as well. Here's where you see Venus and Chiron on this day here. We had a market move. Trine, as we mentioned, typically has a positive effect in the marketplace. Certainly didn't mark a high or a low, but as I mentioned to you, that aspect of when that angle is lined up, it typically has a positive impact. We can see here as we come back into the July time frame, we've got three aspects occurring. I just got to separate these for you so you can see what's going on. And so we had on the 7th, on the 8th, and on the 9th, you had three Venus aspects occurring. And you can see how this certainly here marked a very significant high in the marketplace, right in this time period here. Obviously came back and was tested, and then the market fell off the cliff. So that's why, so in this case here, you had Venus square Uranus, Venus trine Chiron, and Venus opposite Pluto. And I don't know why this stuff works, folks. I just know that it's easy for me to just simply go to my ephemeris tool, go ahead and grab what's currently going on and just simply apply it to a chart and pay attention to it if you see something that is working. In this case here, Venus square Uranus really didn't have any impact on the marketplace. So, we're dealing with with it being August 15th, we're dealing with the Mars conjunct Sun. And those, when I take a look at the Mars aspects here, here obviously marked a high. You got to give it just a little bit of playing room with Mars and Saturn. I'm just pull this back. I don't recall how many Mars-Saturn's aspects there were, but just let me pull this back and continue to find those, since that's what we have going. Today we've got on the 15th, Mars conjunct Saturn, Ceres, and Pluto. So here's a Ceres Pluto aspect, which marked a high. Ceres Pluto marked a low as the market was moving down into it. Ceres Pluto here was off by a day. This was the day where it was moving down, and this was the actual blow down here. You got Venus square Uranus right here as the market was moving up. Missed it by a day. So, I'll start including some of these charts in the system as well. Let me see some questions here. Gary, I'm Steve. I am new here. Where is the best source to learn about the ephemeris tool? Boy, what I'll have to do, Gary, is if you send me an email, I can give you a list of different books that I've read that are part of my library. And to answer your question, as I was reading through these books, I used to go through these charts and spend time in the evenings or on the weekend just manually plotting these things on my charts, and became really a time-consuming aspect. But what I did start with was the major aspects that were out there, which is what I've included inside. Which I included as we went through I've summarized for you the aspects that typically have an impact on the marketplace. So to a certain extent, Gary, all of the books that I would send you to, you would end up summarizing what I did during the presentation. I'll go back to it. So I'll go back to that chart here. Let me just pull that out. It's a great question. Whoops. Why can't I get that up here? Let's see. let me get back to this. So what I've done for you is, if you were to go read all the books and spend all the time that I did, this is what you would come up with. At least, so that way, if you're going to redo all the same material that I did, Dave, this page right here, which is hundreds of hours, and it's good reading, but this in essence is what you would really come up with. So, and then it's just a matter of using the ephemeris to go find these or be aware of these when they're occurring on a daily basis, which is why I'm going to go ahead and include, the other table. So on a daily basis, you'll see what this is inside the charts. And then I just simply, from a time standpoint, decided to go ahead and spend the money to create a tool that had all the data so that I could go back and actually take a look at it. Because I'm not much of an individual that could give you lots of great information about the planets, and I'm just looking for things that work and information that might help us to understand when there might be some type of market change. So hopefully that helps. So let's see, that was Gary's question. Dave Cash, Steve, GBD sold off, and I know we do not have a stop. Is it still good to hold, and where should we see it bounce? Sorry if this was no, that wasn't asked, Dave, and that's a good question. And let me go ahead and pull up the chart here. So GBG took a haircut today. Let me switch over just simply to our holdings here right now, and I'll go ahead and pull up that chart. And they released their numbers. They've got some cash flow issues. They've got some. They've had a change in management out there, and we entered this trade here as an option trade, which was why we went ahead and only the difference here was we just took 1% of our capital, and that 1% there was the total trade here. You can see the volume, has come out pretty substantially here right now. This was always an a option that would have no expiration date on it because we were shooting for this high volume high that's out here. I don't think we're going to see that high volume high anytime soon. With this being an option trade, what I thought, Dave, that I would do is wait to see how this trades here for a couple of days. I would expect. Well, I don't know what to expect. I know that it can only go 23 cents lower. And at this stage here, all I want to do is just wait and see how this trades here for a few days. And we might, that's really all that I can do. There's just not enough information. If we take a look at how this thing traded here, how it's traded intraday, you can see that really, all the selling took place here in just really the first 30 minutes of trading. This is a 10-minute chart that I've gone to, so all of the trading here just simply has just simply backed off. So, they've got a lot of great resources. I don't know if this ends up being bought out by somebody else or whether they BK this thing. I really don't know. But this was always done as a option trade, and it is what I recommend for each of you guys out there, that if you're taking a look at anything that's $1 or less, that the way that you view the trade and enter the trade is as an option. And, you take 1% and maybe 2% of your total capital, and, and that's how many shares you buy, how many ever shares that will buy for you. So, sounds good. We'll look for a sign of strength. Yeah, exactly. So I just think that's the way to trade this thing. Let's see, the same question as Dave Cash. Okay. Gary. Okay. So good. Let's see here. So we've got some time. So that's what I've got on the. Are there any questions with regard to the planetary or lunar stuff that I've presented? If there are, just please go ahead and type those in. Otherwise, let me just go ahead and let's take a look at some of our current holdings out here. I think that's probably a good place to start. You trade the VIX, and would you buy some? I don't trade the VIX. But you've asked the question. We'll go ahead and put that chart up on the screen. It trades just like any other chart here. But if we go ahead and put up the VIX, which is trading low. It's not anywhere near all-time lows. And I'll just simply go ahead and put up the monthly chart on this. And so if we put up the monthly chart and we go back, you can see that the levels back in 1994, which is really where you saw the lows, was down at $9 and change. I don't have charts that go back, and my VIX data doesn't go back before 1990. It traded even lower than that. So, at this stage here, just simply taking a look at a monthly chart, I just wanted you to realize that it's not near all-time lows, if that helps you, because I know that I've heard information out there on the in the news media, CNBC and elsewhere, talking about, and other folks out there saying that the VIX was at all-time lows. And I'm kind of like saying, well, what do you mean? It's not even, okay, it's close, but it's not even close, if you know what I mean. So, I don't trade the volatility index out here, and all that I would do is I would be looking for some sign of strength out there, some candle formation, and this candle formation right here was a good one yesterday. So this was a bullish sign. Now this has seen some bullish signs in the past, such as right here on June 21st here, when you had this nice bullish engulfing, but that ended up failing. So my apology. Yeah, my hammers. Anyway, so let's go back. Let's go take a look, but keep typing in questions here. My eyes are darting around, and let's go take a look at the most current trade that we are in right now, which was the SOXS, which is the semiconductor index. So as we take a look at that, we entered into that trade this morning. It's at 3240. And when I took a look at us entering that trade here, what I had done was I just came down to the 30-minute chart, and this was the close yesterday. Let me see here. Yeah, right here. This bar right here, this green bar, was the close yesterday. And it's a little shooting star candle on a 30-minute chart, and that's a bearish candle. And that suggested to me that it ought to at least move down and test some bar. And I just simply chose this higher, this little bit high. You had really two higher volume bars to take a look at. This one back here at 10 o'clock in the morning on August the 10th, and then this bar right here. So I just simply chose the top of this bar. You'll see that price, the high is 32.14. I believe 32.14 was our entry price. But just so you understand where that actually came from this morning. Now, we're in this trade here really because of the actual index itself. And so if we go take a look at as I was going through all the index charts this morning and summarizing things, it's when I ran across the fact that the actual SOX, the semiconductor index, had formed both a butterfly and a Gartley pattern. So we had two nice patterns that were setting up, and the butterfly pattern was coming off of this July 3rd area here, and that completed right in this price range right here. And then we also had a 0.618, a Gartley sell. So a butterfly and a sell, and that was the reason that we went ahead and chose the semiconductor. It's also, as I came across that, and this candle right here, it's referred to as a bull sash. So it was, and then we had a close lower yesterday. So it was the combination, it was really everything that you would want set up, which is to see a pattern take place. In this case here, have a bearish candle present itself and then have follow through, and that's what we had. That's why we went ahead and entered the trade there. Now, in order for these markets to move higher, and they can, certainly I can't control which way the markets are going to go here, but everything seems to lead at this stage to a market that's going to pull back. How far, I can't tell you, but a market that's going to pull back here. And in order for the market to go higher, I would not expect the SOX to produce this pattern here. So because the semiconductors are gonna participate in any kind of market rally that we have. Question from Dave: is the setup in the SOX similar to the XLK? So let's go take a look at, and I believe the answer is yes there, because the XLK, the technology sector, and I haven't looked at it for a few days, is very weak out there. Where's my spider list here? Let me just go ahead and pull it up. So let's go take a look at the XLK for. Let me see there. Give me a moment. So if we take a look, let me just get rid of all the lines out here. So in the case of the XLK, if we came off of the top here, it looks like it's more than a 0.786 retracement. So it's not really the same setup here with regard to having both a Gartley sell and a butterfly buy, because you're well past that 0.786 area. And what that is really doing here is just testing the swing point from April the 3rd. And if we take a look and see how it's doing on that test, because I haven't looked at this for a few days, let's just take a look at the volume as it's come back into this area here. So you've come back in there. What you did yesterday, Dave, is you rejected that swing point on lighter volume. So I'm going to go ahead and get rid of the retracement here. So what I'm referring to, folks, is if you take a look at April 3rd, that's the swing point high that's out there. And the first time that was tested was yesterday. And if you take a look at the volume on this, what you're going to see is the volume on this candle here, the swing point, is a total of 6.7 million shares. That's this red line coming across the bottom. And as it came back into yesterday, it was 6.3 million shares. So, you did it on lighter volume. It closed lower. And let me just take a quick peek here, see if there's anything else that I see. Nothing else really right now, other than just simply testing on lighter volume. And today's candle is a doji candle, so would this be a short setup as well? Well, if you're not inside the Q's trade, then the answer would be yes. What this hasn't done yet has not given you a bearish candle signal. All that yesterday's candle was a test of that swing point. Now the volume today, and there's still 12 minutes of trading, so I don't know what's going to come in the last 10 minutes here. You've done 4.8 million shares, but what I would do. And it just really depends on where you're set up on any of your trades, is how I would trade this is I would be taking a look at, if I were not in the market already, I would be taking a look at going short, certainly in the close of Friday. So there's this possibility that the market moves up, into the new moon. And the reason that I say that is because the new moon and full moon cycles have just simply work better than anything else that's out there at this stage. It doesn't mean that this next one is going to work, but that's really how I would play it on this case. Now, the other way that you can do it, if you're interested in playing the XLK, and let's assume that it closes right here at about $30.18. Now that you've had a test of this swing point on lighter volume, and assume that you get a doji candle here, what you're looking for tomorrow is a lower close. If you get that, then you've got everything that you could ask for. The other option would be tomorrow, if it gaps down just a little bit, then you could go ahead and maybe take the intraday trade on it, and that's how I would take a look at the XLK. So I hope that helps. Let's go back and take a look at any of our other trades out here. Obviously with the market just kind of going sideways, that's on the index. Let me pull up our trades here. See if there's anything else out there. Okay, so we know where we're in on the SOX trade and why we're in there. Actually, let's do this because I don't have a bunch of other time and there's running out of time. Actually, I'm just going to show you some of the other trades that I'm really taking a look at. You've been watching me take a look at the GDX and being able to come in and take a long trade on the GDX. That is the Gold Miners Trust. That's been pulling back here. That's a nice pattern that's set up. Let me see if I've got that here. I don't know. And so I'm lining up the GDX trade. It might not be here with some other gold stocks, and these are really the four different gold stocks that I've been taking a look at. So GFI, which is a stock that we have played before, gave a little bearish candle signal here on the 13th and has been pulling back. The same thing with AEM, and I like AEM probably the best of all, just simply because of the sign of strength that this has had. So I'm really watching AEM as this pulls back here, and this gap here, what would really be ideal, and I just don't know if it'll get back there, would really be a test of the July 26th gap. So the low there is 41.55. I'm just simply going to have to watch to see if it gets rejected up here at the high, at the 42.83 level, if you can get down there. And I think that it will, because we had a bearish engulfing, we had a close lower yesterday, and today you had a gap down. Slight gap down, but you still had a gap down. And what I really like about this trade is if you take a look at the volume, even with these bearish candle signals here, it's not like there's a lot of sellers in this stock. So of all of the gold stocks that I'm taking a look at that, I'd be looking at entering, it is likely this one that we would take a look at. And this what it did here is it really stopped where it was supposed to. If you take the chart back further and you look over to the left, you see this high volume downdraft that it had. So you can see that the low of that, I'll just simply draw the line for you, and we'll just sorry about that. If we draw the line, it's really doing what it's supposed to do as it got up into that area. So you can see, the volume there. So that makes a lot of sense. And you can see the low on that bar was 45.78, and you can see how it got in there, and on obviously light volume. So it's doing what it's supposed to do. And the real first sign of strength on this, so here was a sign of strength on this stock coming back here. And here is that second sign of strength. So this chart here is the one, and I realize it's got some work to do, but this one here really intrigues me the most. And what I also really like is that if you ever get up over, right now, the B point on this is August the 8th, and you can see it doesn't have a lot of volume, 2.2 million shares. So the ability to get up over that and make an A to B equal CD becomes a pretty easy thing to do, and so that's one of the stocks that I'm taking a look at. The other just simply taking a look at the overall gold miner index. This was the Gartley sell pattern that's set up here, and it had the bearish engulfing, and yesterday was a lower close. And the question is going to be whether or not we would need to enter a trade right here on this high volume bar. So ideally, it would get back into these two areas, but I can't say whether or not it. I'm simply going to have to watch it as it's getting into that August 1st area at the 43.05 level. So those are some trades that I'm looking at. They're not in the newsletter in the watch list. I just haven't had a chance really to update the watch list for all the different stocks that I've been taking a look at. And on that list includes all of these, like O'Reilly Automotive, AutoZone, looking for possibly looking for a trade. AutoZone actually, I think, is been setting up a pretty good. This may be really setting up a trading range, and what I mean by that is, here's the high volume on this candle here on the way down, and you can see this area here was tested. And it was tested on pretty light volume, and so far rejected it. If we actually got a bullish candle sign here, this thing could really have a pretty decent trading range. We're talking from 350 into the 380 level. So this thing may not be ready to really bust out its lows here, and could be setting up a very nice trading range going both ways. And that's on AutoZone. And the thing that concerns me on some of the auto stocks here is this one here, which is Advanced Auto Parts, which I had looked at taking a short trade. But look at this hammer candle here. This thing's got some pretty good support in it. So, I don't know who's in it, but I can tell you that this weekly hammer candle is very impressive. So that's why I have not wanted to actually go short AAP. And the other one that's setting up a nice possible trade here is eBay. And so let's say that the market does start pulling back. What we'll be watching for is we'll be watching for eBay as it comes back and it tests this gap area. And really what it's really doing right now is, I realize gaps will get filled at some point in time. I'm just not sure that eBay is one that's going to want to fill this gap anytime soon here. In fact, I think eBay needs to do a third gap to have an exhaustion gap before that occurs. So I think there's another gap left in eBay, and the bottom here has been tested a few times. So you can see after that gap up here, you had the test here, 1, 2, 3. It's been tested to the downside, and it's also been tested here now a couple times to the upside. So this is setting up a nice little consolidation box. So if we do see eBay pull back down to these lows here, we'll probably come back in on this stock. So just a few minutes left to go, and I know the production guys want to go ahead and get ready for Tom's show. So if you do have any other questions, folks, please send me an email, steve@tfn.com. Thanks for joining me, and have a great day. Take care. Bye-bye.